What's up, everybody? Welcome to the December 15th, 2025 IndiView Weekly Market Update. I'm Jeremy Bryan. This is brought to you by IndiWell. Today, we're going to talk right about the hot button issues that are going on with the market. So without further ado, let's get going. Let's start here. Let's start with the market kind of working without AI right now. And really what that means is the AI stocks, which I've been talking about for, I don't know, basically all year, have really been substantial with regard to the size in the overall S&P 500. So they have an outsized impact in the S&P 500. And I've said that if those were to trail off or decline, it would be really tough for the other 493 to offset that enough to keep the markets moving forward. Turns out I might have been a little bit wrong on that. We have seen some decline. Now, again, this isn't across the board because companies like Apple over the last 3 months, companies like Google, especially over the last 3 months, and really honestly all year, have been very strong. But other names in that space, especially probably the predominant one is Oracle, has had a really difficult time over the past few months. Now, that's not as sizable as these other ones, but even companies like Broadcom, companies like Microsoft, even NVIDIA to a certain extent over the past 3 months, really hasn't accelerated their performance, but the market has kept going upward. We're right near all-time highs at this point right now. So it has been interesting from the transitional component and people making other adjustments, right? And saying, well, these might not be as good, but we're just going to shift that money into other things. Healthcare, looking at the past 3 months of performance, healthcare has been absolutely a beneficiary of this. Many of those companies are up 20, 30%, especially in the pharma, which had gotten very, very cheap, with the exception of Eli Lilly, which has been, a secular story on the growth of GLP-1s. But even some of these other ones like Pfizer, Merck, Amgen, Johnson & Johnson, these companies have seen some pretty substantial rebounds here over the last 3 months or so, to where they've driven performance upward as well, and just a broader swath of companies that have had some pretty substantial performance. Walmart just seems to never go down anymore. People just think that they're kind of in the Goldilocks scenario right now, right? They're growing from an e-commerce perspective, and also if you believe in the K-shaped economy, they tend to be beneficiaries of that trade down effect. So Walmart has continued to rise, while Costco has struggled a little bit over the last 3 months, but overall, I mean, you're seeing a broader swath of companies. I talked about this a little bit last week, but just especially in the past 3 months, I mean, the AI centric stocks have not been what has driven this market higher, which portends to actually pretty relatively positive. If we can get more participants, that's always better for the markets overall. It makes things a little bit healthier, broadens things out. It's a better overall solution than, just a couple of companies leading the entire thing. Turning to number 2, Fed Governor Kevin blank. Whether that's Kevin Hassett or Kevin Warsh, we don't know yet. So the president came out this weekend and says he supports the Kevins. He says both Kevins are great. And you saw the odds for Kevin Hassett was becoming by far the predominant thought that would be the proposed next Fed governor when Jerome Powell's ends in May of 2026. We're seeing that has now gone to pretty much 50-50 with Kevin Warsh coming up as a potential replacement for Jerome Powell as well. So we got a little bit more of a dead heat in this race, and really both of them are supportive of what I would say probably further interest rate cuts. I think that's why Trump has touted them, because he is clearly in the camp of more Fed-oriented cuts to interest rates. We'll see what ends up happening here. I mean, a lot of this stuff is really, again, conjecture. When he comes out with an actual Fed governor proposal and sees where the nomination, then we'll start to get a sense of what the actual rubber meets the road from as far as policy perspective and potential policy changes. But remember, the Fed governor does not act unilaterally, right? He has a board of governors. The Fed chairman is the head of that committee, and he tries to steer that committee in the way that he thinks is best. But it's part of a broader committee. And so the committee is what makes the decisions. So this person does not act unilaterally, but they do have some influence. They're probably the ones from a commentary perspective that are most closely watched. So it's very important who we end up selecting here. But I'm not going to make a lot of broad assumptions about what this means for interest rates, what this means for anything during a time where we're at 50-50 about who's going to be selected. Turning to number 3, rebound stocks versus value traps. I thought this was interesting. I saw this on social media the other day about people just guessing at, of the stocks that have had real substantial declines, who was most likely to face a rebound or to experience a rebound that causes them to be one of the predominant outperformers going forward. And there were a bunch of names floated out there. I thought it was an interesting exercise. And so I spent some time this weekend and this morning just looking at stocks that are down substantially, whether that's 30-40% from all-time highs and whether that's 20-30% from 1-year highs, right? Just stocks that have declined. And the list is bigger than you would think, considering we're at all-time highs or near all-time highs in the S&P 500. So there's quite a substantial list of companies that have faced 20-30% declines over the last year, and also 40-50% declines from their all-time highs, whether that was this year or prior years. So it's an interesting list and it's an interesting thought process. But what I'm always cautious of is rebound stocks versus value traps. And to be completely honest, this is where, from my perspective, that I probably have the most misses in the markets. As I look at substantial historical performance, I look at earnings growth, I look at what the health of the company looks like. And some of these times you look at them and you say, wow, this is a misfit. There seems to be something off here with regard to what we're paying for it now, how substantially it's declined versus what its future roadmap looks like. I think that's a good way to look at stocks and analyze stocks just in general. But where you can fall down in this type of buying perspective is you can find those ones that, for whatever reason, the market sentiment is just ahead of what's happening. And they're saying, hey, there is substantial decline coming ahead, or there's obsolescence coming ahead where they're being, replaced by something else. These kinds of things. So you have to be careful here on the rebound stocks, because just as many of those rebound stocks, and probably frankly more, tend to fall into this value trap where there tends to be just a continual progression downward. Lastly, number 4, my judge of a menu. So this is when I go to a restaurant, when I go to a new place, and especially if it's kind of like a bar and grill type of place, which tends to be my jam anyway. I usually get, or at least one of the first few times I'll go there, and there might be something special, unless it's a specific menu. But if it's just a broad-based menu, I judge them by their French dips. I take a look. 1, I love a French dip. I think French dips are phenomenal. 2, I judge them based upon how good their French dip is. Because if they can do a French dip well, they're probably going to do other things well. If they don't do the French dip well, or they don't pay attention to it, because there's a good French dip and there's a bad French dip, right? There's soggy bread that just falls apart. The meat's dry. The au jus doesn't have any flavor to it. If you've experienced a bad French dip, you know what I'm talking about. But there's also really good ones. And so you have to be on the lookout. If you find a really good French dip, chances are they do other things in the menu very well. At least that's my opinion. So that's one that I will judge the menu. And if it's a weak one, I may not go back there again, because I'm going to have concerns about the rest of the menu. So from my side, my French dip is my menu judger. I'd be interested to hear what you all have for your menu judgers when you go to a new place. What is the dish you go to that will judge other dishes, and whether you'll come back there again or not? So that's all I have for this week. Tune in next week where we'll have our next hot button topics. Until then, thank you very much and take care.